Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be going over the pump and dumps and the dump and pump templates. First, we'll be reviewing the pump and dump template, clarifying some questions, going over the setups in detail, but understanding the importance of filtering through instruments to identify the highest probability candidates, understanding the difference with currencies, gold, oil, and the indexes in terms of the volatility and the ranges and the levels of rise and fall. And then looking specifically at different setups that can present, whether they're in Asia, London, or New York, the importance of timings. Specifically, we'll be addressing the New York session and understanding when there is and isn't any major red news in a session that you are trading and how that can affect the type of opportunity or setups in terms of the timings. We're looking for escalator, elevator type templates, which we will be reviewing again. We've gone over those in several previous videos and trade setups charts on the community page, but we'll be reviewing that. And then understanding that you can have a 3-day pump and dump that specifically may be more common in a currency over the larger 3-day setups, 3 levels of 25. And we'll look at some specific examples of that as well in terms of the opening range and initial balance, day 1, day 2. But also for 3 sessions, depending on the instrument you're trading. You can be in a 3-level setup, not necessarily 3 levels of 25, but you are in 3 separate levels of trading between the high and the low. We can get a dump before a session begins for the pump, or a pump before the session begins for the dump. And also how that can build over 3 hours. 1 push, 2 push, 3 pushes for an explosive reversal, whether that's in the US, Asia, or the London session. Specifically, again, my main focus is the New York session. I will look for opportunities, the same types of setups in the Asian window, either on the front side or the back side for 1 or 2 high probability 90-10 parabolic opportunities in the session that I'm trading, usually more specifically in one of the Asian crosses. And then we'll just review also the importance of understanding session highs and lows form the peak formations. There's been a lot of confusion and misinformation regarding that, just thinking that every swing high and low is a peak formation, and it is not. We're looking specifically at what forms the highs and lows in the sessions themselves, whether that be in the Asian session, a London session, or a New York session. But we have one each day that is already formed for us, and we'll be reviewing that as well. So if we come back to just a simple understanding, looking at a basic chart, we have our low of day perhaps already in place. Now we may have that form in the US session. We may get a peak formation in the US session that begins the beginning of our pump heading into our new day. We can get an Asia push. We can get a London push that pushes even higher in our US, Asia, London window that can end up rolling over for a 3-level parabolic. Now, understanding again that we have 25, perhaps 25, and we're into the 3rd window of 25. That gives us a 50 pip box targeting the low of the day. And in most cases, most stop hunts through a high or a low of a day will be 25 to 50 pips. So remembering that when a market is going to reverse or collapse through, they don't just come and tap the low. They typically will come down and not only stop traders out, but they will run through their stops 25 to 50 pips, and then if they're going to reverse, or in some cases pull back and continue for a measured move. Now sometimes a market may make a lower low before beginning its rise back up. We might get a lower low in Asia that triggers shorts. It triggers new breakout traders into the markets before pushing up higher into our London and New York window and collapsing back through the low of the day. That is another variation. So we redraw our low of the day when that presents. We can get a market that pushes up in our US Asia window. The Asian session forms our peak formation low of the day, and that market may break down and pump up in the London window and roll over, and we may get a low hanging fruit trade in the US session. Again, pump and dump over the larger 3-session setup: US, Asia, London, and then a low hanging fruit trade in the New York session. We can have a market that's breaking down inside and forms a peak formation low at the beginning of our US window and pushes up 3 levels, 1 hour, 2 hours, and a 3rd hour collapse. So presenting different variations, but understanding that when we are in a pump and dump template, the opportunity that can present, and often looking for a minimum, and we can see on currencies of 1, 2, and 3 levels of rise. Now, sometimes with a currency, we might see a market that forms our low, and in the gap time between the London and the US window may push up, and the US window opens, and it breaks down through the low of the day. So again, understanding that we have 1 level of involvement, 2 levels of involvement, and even though it doesn't go all the way up to the high of the box, we have 3 levels of involvement. And when this market collapses, we now have an area that potentially is 25 pips or more, depending on how this market proceeds to break down. The timings, the levels, and the behavior of price when it gets there. The basic model, though, is 3 levels of rise, whether that's US, Asia, London, Asia, London, New York, London, New York, and Asia. 3 levels of rise, consolidation for the dump. In a lot of cases, we can see a currency behave in a similar way where we'll go up 3 levels. They might pull back on the inside, push up 1 more time, and break down for the collapse. And we can see this on day 1, day 2, and day 3. Simple understanding, though, is 3 levels of rise for the dump, whether that is in a session over 3 days within 3 sessions, or 3 days, 3 sessions, high of week or low of week for a parabolic reversal opportunity. Now, for example, if we take a look at gold on Monday today, we have a market that has dropped down 50, 50, and we don't get down to the lower 50. And so timings, levels, behavior of price. When we start our US window, the low of the day is formed in the gap time between London and the US window. And if we just use our 5-minute chart, we can just project up from that lower level below 50, 2 levels and 3 levels of rise. The market keeps going into the end of our 1st hour and then beginning of our 2nd hour window. We're now again targeting the New York Open at 9:30 a.m., which is the close of this little pin hammer at the high of our session. Now, some traders have entered into the market just below the break of this at double zeros on the open itself, but this structure, we'll zoom in on this, can be construed, the big black engulfment candle with the opening candle itself engulfs the entire upper structure. That can be construed as a death candle. The death candle scenario, we have this is a 5-minute chart, the pump up, and then the engulfment inside bar, double zeros, 15 minutes after the New York Open. So remember, we've discussed taking traders at the open of the market back up into the high for the 75 pip collapse back through the low of the day. Now coming back, just looking at price, behavior, timings, and levels, we have 1 push, that breaks higher. We have a second push that breaks higher. And then we have our third push into the high at the New York Open for the reversal and collapse back down through the low of the day. Now remember, the setup that we're looking for when the market pumps up at the beginning of the session is the dump. If it dumps down at the beginning of the session, I'm looking for a pump, and we'll look at a specific example of that. So again, this is our Monday chart, our opening range. And if we just back this up, I want to also reiterate we have not broken any of the previous day's previous high or low of the day, which means we are inside. And when we're inside, we work from either the high or the low of the day. The low of the day was put in place in the London gap time. They pumped it up 3 levels of rise into the New York Open. Now, specifically for this video, we're talking about 9:30 New York Open opportunities. I know there are traders that went long. There are traders that went long and short, but we're talking specifically at the New York Open 9:30 timing window. Now we're looking at a 1-minute chart, and this is where I emphasize on repeatedly timings, levels, behavior of price, because once you have a thesis in place, traders often say, well, the 1 minute's too fast, it's too volatile, and what about the 4-hour chart and all these things? But when you understand the template and the setup, and you know that you have 3 levels of rise, and we now are into the New York Open, and they've taken us up to the Open, and that we've broken structure on the inside at the Open, this is the trade setup right here. Pump into the high of the day, double zeros, engulfment for the dump back down. Timings, levels, behavior of price. So when traders are focused on the little bars instead of the levels, they often will miss trades. And so we have levels as well as the behavior of price action at double zeros. Reminding that I've said my maximum stop on any one particular trade setup typically will be 20 pips on gold, oil, or the indexes. And occasionally it may come out a little bit larger, but I'll be scaling in if that trade is about to accelerate away. So if we have a level, and our max stop might be the high of day initially, if we're adding into that trade as it starts to collapse, again managing a 20 pip max stop on a volatile instrument, or even tighter as we can bring that down as this trade starts to break down below that level. Just isolate this down here, back into the pump before we break down one more time, a little area of 5 to 7 pips where we may be adding positions or even through the break, and then locking the rest of them in at break even, taking some off, or holding all of that for the collapse back through the low of the day. Escalator, elevator, pump, and dump. 3 levels of rise, timing window, consolidation, New York Open, break in structure, pump back up into the high, timings, levels, behavior of price. 15 minutes holding the high, locking it in for the vertical collapse through the low of the day, which ends at the end of the second hour. At the low of the day, 25 pips below, we get the beginning of our third hour, which locks in the low of our day. So 3 levels of rise, pump and dump, New York Open. So as I mentioned last week to traders, don't do anything. Focus on the New York Open. Don't worry about the news. Don't worry about chasing things in the first hour. Stick to mastering some simple setups. Find the instruments that offer you the best pump and dump or dump and pump at the New York Open. Now, if we look at the Japanese yen, we can just come back to our day count. We have a day 3 on Monday because Thursday was a failed breakout at the high of the week. If we back the chart up, Thursday is the failed breakout at the high of our week. We come down on Thursday. Friday goes lower and breaks out again. So now we have day 1, day 2, and we have volume trapped outside the low of Thursday when we come into our New York session. So we have a market that continued to go lower on Friday and broke out and then reversed in our Asian window. So looking at price and seeing higher highs, we have higher highs in Asia that dumps down first before pumping up. So we're heading into our US session. We have a market that has now gone 3 levels of rise, from the low of day. So again, just looking at our basic number box, 1, 2, and 3 levels, but that market proceeded to go higher. So we have higher highs in our Asia window. We have a higher high in our London session that continues to push higher prior to our US window. So remember what I said, that is the high of the current day inside, and it dumps down before the session begins. If it dumps down before the session begins, what are we thinking? We're thinking pump. Now I want to talk about peak formations while we're here. We have 3 levels of rise, but we also have a peak formation. Now, traders have said, I've seen different comments from traders and they're saying, oh, it's every swing high and swing low. I want you to look at the colors. That's a session. So the session boxes that when they start, that's the beginning of the new session. But we have the low of the day. That is a peak formation. When we start our new day and we have a low of the day and a high of the day in place, those are our peak formations. There's a peak formation high and there's a peak formation low. We make lower peak formation highs on the way down within that session itself. Now, those are the most recent peak formations. When the new session window begins, we're making lower highs and lower lows. Those lower peak formation highs therefore become the peak formation high and peak formation low that form heading into our new window, which gives us our reference highs and lows for the consolidations. So when we head into Friday, we have a low of the day in the US window, and Asia puts in a peak formation high of the day on Friday. Now, if we come back and we just take a look at our low of the day and we have 1 box, 2 box, and 3 boxes, the market goes higher. That makes our 3 levels of rise and fall for that particular day itself, peak formation high, peak formation low, and a consolidation inside that then reverses on payrolls. We have a higher peak formation low of the day itself. And you'll notice when if we zoom in our little green box onto the high and low of that peak formation, we have 3 boxes. We have a lower box, a middle box, and an upper box. But that gives us a 50 pip plus range from high to low if we have an opportunity. They push up into the high. We had a first bounce trade on the non-farm payrolls release, but also recognizing when they bring traders up a level, the volume is being kept up high before the reversal trade. 3 levels of rise for the short trade at the top of the box. They push it up into the high for the dump. Remember, escalator up, elevator down. Now we head into our Monday session. We've come up 3 levels of rise. They've put a peak formation low in place in the Asian session. A peak formation low of the day at the previous day's low. So coming back to the understanding that on a day 3, there are 2 types of opportunities that I'd be looking for. A parabolic trend trade or a parabolic reversal trade. Now, there are different types of day 3s. We're not going to go into that, but Friday is the last day of the trading week, and we have a Wednesday, Thursday, Friday template. This is also a day 2 from high of the week, day 1, day 2, and making Monday our day 3. Now, Asia puts a peak formation low in place and makes higher highs on the inside. Higher highs on the inside is the setup for the dump and pump. We've had 3 levels of rise, but they dump it down before the session begins. Now remember, we're talking specifically about the New York Open, 9:30 New York time. But in these other windows, when you understand the type of template that is potentially setting up, you'll recognize that there may have been an opportunity in the Asian session. There may have been an opportunity in the gap time heading into our US window. And there may have been an opportunity at 9:30 our New York Open. We have potentially now a failed breakout at the low of the week, at the beginning of the week in a new weekly template. Now this is where it's important to understand timings, levels, and the behavior of price. This is the current high of the day heading into our US session. We are not at the high of the day. The market is going down into the first hour of our New York session. So we aren't at the high of the day and we aren't at the low of the day. We are inside. But we are also now dropping down 3 levels, upper level, middle level, and lower level right at the New York Open. 9:30 New York time. We have now dropped 3 levels into a market that was pumping up Asia-London. Asia puts in the low of the day. London Gap has put in the high of the current day. We haven't broken any levels. We've traded down into the low of the day before breaking structure and making higher highs. Thesis now potentially is that the low of the day is already locked in and in place. They trade back into the peak formation low, the higher peak formation low made in the Asian window right at 9:30 New York Open, giving us the opportunity for the dump and pump setup. This is the 5-minute chart. We have a market that dumps down in 3 pushes. 9:30 takes traders right into the low of the day before reversing pin hammer engulfment on the next candle on a 5-minute chart underneath of double zeros for a 50 pip move back up to the high of the day. Dump and pump. Now if we put our universal EMA on there, we can do this on any time frame, 5 minute, 1 minute, 15 minute. We have our entry, 3 levels of drop, dumping down before the session begins, forming a peak formation low of the session in our New York Open window for the reversal back up to the high of the day. They've traded back down into the low of the day, peak formation low made in the Asian session, higher highs, higher lows, dumping down before the session begins, 3 levels for the reversal back to the high of the day. And we can take a look at the DJ30 Monday. We're going to just look at some other examples again of the dump and pump. We have the opening bar 15-minute chart, open price of the week on Monday that makes higher highs. We make a high in the Asian session and a higher high in the London window. Higher high on the inside, and we are inside the peak formation low from the US session. So remembering that the low of the day and the high of the day are made by peak formations. And if that changes on the way down or on the way up, we redraw those peak formations if they are made specifically in a session itself. We make higher highs in the London window. That makes a new high of the day, 3 levels of rise heading into our US session window. So we go to the closing price from Friday night and we've come up with a gap from 50 to double zeros to 50, and 50 to double zeros, 3 levels of rise. And we have our low of the day. The opening price is our low of the day heading into our US session window. We've dropped down and made a lower low on the inside. Lower low on the inside, 1 push, 2 pushes into the low of the day. And then we make a higher high. Now remember, we're looking at the New York Open, but we've also engulfed all of our lower 3 push bear candle structures with an engulfment at our low of the day prior to the New York Open. Now this is a 15-minute chart again. So remember, we've made a peak formation low, we've come up 3 levels of rise, and we've dumped down in 1 push, 2 pushes, and 3 pushes into our US first hour open window into the low of the day. We've dumped down and we've engulfed the pattern within the pattern, the rectangle at the low of the day for the potential parabolic reversal. Now remember, the parabolic setup is higher highs, higher lows, angulated as it's accelerating heading into the close. We have a consolidation heading into the open of the New York session underneath the high of the day. That is the parabolic setup. Now we're not at 9:30 just yet. Our universal entry criteria is already coiling inside. There is no major red news on the schedule. Now, this is a 1 hour chart. I just want to show that even with our universal EMA, this engulfment at the close of the first hour is inside of our EMA. This is a 1 hour chart. This is our 15-minute chart. This is our 5-minute chart. This is our 1 minute chart. And this is what I'm talking about when I say that other time frame traders are driving this move. So when traders see the 1 minute chart and they go, oh, that's too risky, you've missed the fact that the setup is already there on longer time frames, and those other time frames are already driving this move. We're timing this at the New York Open. We're entering in as this market is already set up for a parabolic explosive move for over 100 pips in less than 7 minutes. Now let's come back to our 15-minute template. Higher high on the inside that dumps down 3 levels, goes into consolidation, and is already long 45 minutes into our first hour, heading into the end of the second hour for the parabolic explosive coiled price action below the high of the day. Dump and pump. Coming back to understanding 3 levels of rise, 3 levels of fall, working from the low of the day. Now, obviously, the same thing can be applied for dump and pumps from the high of the day. Same situation. We'll do a specific one on that. I'm going to try and break these up into shorter videos. 3 levels of rise. Currencies typically will be three levels of 25 pip boxes, meaning that we can have a lower box, a middle box, and an upper box. They may not complete, but over 3 days, we will usually see, and we'll look at that in the next video, specifically opening range, initial balance, and then a market that has moved 75 pips from the low or from the high of the opening range, high of the week or low of the week, giving us our 3 levels and a potential opportunity for a parabolic setup. Because remember, these markets can move 75 pips and may not offer clean tradable setups because it's escalator type of price action. And that's the difference. We're looking for the elevator. It can be 3 days of escalator type, back and forth, major red news, wicks, choppy markets, but it eventually pushes up 3 levels and collapses from the high of the week or reverses from the low of the week. Sessions that don't have major red news typically will offer easy, clean setups, meaning it could be Asia, it could be London, and as we saw today, New York session, no major red news on the calendar. Escalator, elevator type templates can be 3 days and 3 sessions and 3 hours for huge moves, or we can have a 3-day setup in any one of the three sessions, or a 3-day, 3-session setup, which can offer an Asia parabolic, a London parabolic, or a New York parabolic, especially if it's on a free cash Friday or a free cash Wednesday. New York Open specifically, though, if we get rid of all the other variables that traders are struggling with, if they're trying to trade first bounce, first bar, major red news sessions, or first hour type trades, and I mentioned last week, step back, don't do any of that. Focus on simple pump and dump templates or dump and pump templates that present at the New York Open. 3 levels of rise, 3 levels of drop for easy, free cash, pump and dump and pump setups. Understanding specifically what peak formations are and what they are not. Don't get caught up into trying to draw little levels and pushes everywhere. We're looking for the big picture. That's where you'll get the vertical collapses of 50, 75, or 150 pips, depending on the instrument that you're trading. In some cases, we can get 300 pip moves, gold indexes, and oil as well. High of the week, low of the week, low of the week, high of the week opportunities. But step back. Don't get caught into all the little zigzags and everything else. And we're looking for high quality 90-10 free cash trading type of opportunities. That's what I'm doing. That's what I'm looking for. And then once you lock in that money, understand which setups are scalable in size. Lock in the money, walk off the screen. Don't sit there and try to get more pips. I'm there to make money on scalable, sizable, repeatable setups. To me, that 1 hour, that New York session opportunity is where they will present. Lock in the money. Get off the screen. Impulsive, irrational, emotional trading is what causes traders to give back plus all their good work that they do. They undo it with other ridiculous, impulsive behavior, get even type psychology, revenge trading, anger trading, get back to the high watermark type trading. No specific template, no specific work hours, no specific understanding of how to take profits, lock in the money, knowing when to scale in, knowing when to scalp. The best saying I keep hearing and repeating from one of my mentors: size the best, scalp the rest. 1% better every single day, traders. Winnable game. Focus on the escalator, elevator templates. Pump and dumps, dump and pumps. Every single trade, no matter how it breaks down, whether it's a trend trade, whether it's a reversal trade, it will always be a pump and a dump or a dump and a pump. Have a great day. Keep getting better, and may the markets go with you.